We all have a champion spirit.
Bye, Daddy.
A uniquely Jamaican spirit. We think the unthinkable and reach for the unreachable. As powerful as we are, there comes a time when everybody needs a strength. Something to take you over that last hurdle and across the finish line. Your moment is now. Unstoppable with NCB.
Get simplicity, satisfaction.
Good morning, ladies and gentlemen. I'm excited to be here this morning. Why? Well, this is actually our fourth appearance as a team, as the new team at NCB. And over the past 4 quarters, we have had to stabilize in terms of 3 parameters. Stabilize in terms of efficiency, make sure that our governance was robust and strong, and also stabilize in terms of the customer experience. You see, NCB Financial Group, what most people don't realize is it's a unique combination, unique in the world, combination of a major banking institution and a major insurance institution. That doesn't exist in too many places in the world. And it's for us now to make sure we capitalize on those 2 entities that under one roof would be a unique entity. And in this case, it's NCBFG. So we have to unleash the full power of the combination of a major insurance group and a major banking group under one umbrella. And that's what we are all about. That is where the huge growth opportunity is going to come from. So initially, for the last 4 quarters, the focus was stabilize. Now the focus is harvest the growth potential that we have. And, you know, banking really and insurance, they have one thing in common. They're basically commodity type businesses. And as is the case with any commodity type business, the winner is the lowest cost producer. And to become the lowest cost producer, you have to have scale. NCB Financial Group, both Guardian and NCB, we have scale. So we have the potential to be the lowest cost producer. And I'm here today to say, not only do we have potential, but that is our mission, to be the lowest cost producer, because that's how you win at this, in any commodity business. But what those 2 businesses give us, businesses give us traffic, consumers who are buying our products, using our products daily. So the highest value added we can now give to our consumers, or customers, or clients, is to make them wealthy. So that is now and that is where the uniqueness of this group and what the experience that this group has, that is our highest value add to the consumers we call clients. So our progress, the progression we have shown over the last 4 quarters in terms of efficiency, governance, and customer experience are tangible evidence that the retooling of NCBFG is taking roots. Today, another reason I'm excited is because this quarterly report will highlight to you the progress we have made over the last 4 years financially. So it's not just only qualitative, it's also quantitative. And it is with that in mind that I'd like to kick off this meeting by turning, without any further ado, over to Mr. Malcolm Sadler, our Chief Financial Officer, who will walk you through the last 9 months and the last 3 months. Thank you.
Thank you, Chairman. Shareholders and customers, participants joining us via web streaming, representatives of the media and analysts, fellow colleagues, other stakeholders, good morning. I will share highlights of our financial performance for the 9 months ended June 2024. The group has achieved another profitable quarter. We took important steps at the start of the year and during the year to date to optimize the group's operations and improve the organization's resilience. One, we have been making the necessary adjustments to our capital and balance sheet management strategies to ensure net interest margin, NIM, and asset quality preservation. Two, we have been focused on cost management, which is evident in our improved cost-to-income ratio. Three, we continue to strengthen our capital and liquidity in accordance with our operations and the various regulatory requirements. Fourth, during the quarter, NCBFG raised $2.5 billion through an additional public offering. These shares were listed on the Jamaica Stock Exchange in July 2024 and are also to be listed on the Trinidad and Tobago Stock Exchange. Also, we adopted International Financial Reporting Standards, IFRS 17, which is an accounting standard that is applicable to insurance contracts. The transition to IFRS 17 represented a significant accounting change, particularly in our life, health, and pension segment. This shift required changes in our financial reporting and risk management practices. The prior financial statements were also restated upon adoption of IFRS 17. Looking at the highlights of our recently released unaudited 9-month financial results, the group reported consolidated net profit of $21.1 billion for the 9 months ended June 2024, representing a 79% or $9.3 billion increase over the prior year. Consolidated net profit attributable to shareholders of the parent was $13.7 billion, representing a 61% or $5.2 billion improvement over the prior year. Operating income of $94.2 billion increased by 12% or $9.9 billion. This was largely due to higher operating profits from 4 of the 7 business segments, with the life, health, and pension segment accounting for the largest increase. Net revenues from banking and investment activities of $57.3 billion declined by 4% or $2.3 billion from the prior year. This was primarily due to lower unrealized gains on securities. There were also higher credit impairment losses, mainly in our payment services and corporate and commercial banking segments. The group, however, recorded higher net fees and commission income and net interest income, driven by increased transaction volumes, growth in the loan and investment portfolios, as well as improving yields. Our primary focus will continue to be on growing our core revenue streams. Net revenues from our insurance segment was $36.9 billion, reflecting an increase of $12.2 billion or 50% over the prior year. This was primarily attributable to 1, increased fair value gains, Two, a non-recurring net gain of 3.3 billion on adoption of IFRS 17 related to the redesignation of certain financial assets. And three, increased net insurance service result. Operating expenses of 69.1 billion were held within a 1% or 833 million increase over the prior year. Our cost optimization efforts and focus on revenue generation resulted in improvement in our cost-to-income ratio, which reduced to 69.16% from 77.35% in the prior year. The group's increased profitability has also contributed to an improvement in our return on equity, ROA, to 1.25% from 0.74%, and return on equity, ROE, to 11.73% from 8.91% in the prior year. I will now highlight the performance of our business segments. Our Life, Health, and Pension segment generated an operating profit of 21.4 billion, reflecting an increase of 12.2 billion or 132% in operating profits. This was primarily as a result of higher investment income, including the non-recurring gain mentioned earlier in relation to IFRS 17. There was also increased revenues from various products, including life and annuity products, from various product lines, which included life and annuity products. The Treasury segment reported operating profit of 9.7 billion, increasing by 2.5 billion or 36% compared to the prior year. Growth in the investment portfolio was the main driver for the increase. General Insurance recorded operating profit of 5.3 billion, a decline of 1.2 billion or 18% compared to the prior year. While this segment reported increased net insurance revenues, this was offset by higher net expenses from reinsurance contracts held, mainly from the property portfolio due to tightening of the reinsurance markets. Corporate and Commercial Banking segment reported operating profit of 4.3 billion, a decline of 16% or 811 million from the prior year. Higher cost of funds resulting in lower margins was the main contributor to the decline. The Wealth, Asset Management, and Investment Banking segment recorded operating profit of 2.4 billion, a decline of 63% or 4.1 billion when compared to the prior year. This segment was more impacted by higher interest rates and a reduction in unrealized fair value gains. The Payment Services segment reported operating profit of 1.9 billion, reflecting an increase of 1.1 billion or 121%. The main drivers were: one, increased transaction volumes resulting in higher card-related fees and commissions, and two, efficiencies achieved from the integration of the Link mobile wallet within the operations and product offerings of National Commercial Bank Jamaica Limited. The Consumer and SME Banking segment reported operating profit of 1 billion compared to a loss of 364 million in the prior year. The improved performance was mainly as a result of increases in both net interest income and net fee and commission income of 615 million and 766 million respectively. There was expansion in the loan portfolio, as well as improved net interest margins. Expected credit losses in this segment were also lower. I'll now comment on the components of the consolidated statement of financial position. Our asset base grew to 2.27 trillion, increasing by 82.7 billion or 4% over the prior year, driven primarily by loans, investment securities, reverse repurchase agreements, and amounts due from banks, with a combined increase of 81.3 billion. Net loans of 637.4 billion increased by 6% or 33.7 billion over the prior year. The increase resulted from growth in both our retail and card portfolios. Customer deposits grew to $769.2 billion, increasing by 4% or $30.2 billion over the prior year. Insurance and reinsurance contract liabilities increased to $533.9 billion, an increase of 2% or $12.2 billion over the prior year. Investment contract liabilities of $47.9 billion also showed an increase of $1.3 billion or 3%. Consolidated shareholders' equity increased to $203.5 billion, up by 16% or $28.1 billion from the prior year. Equity attributable to stockholders of the parent was $161.1 billion, a $16 billion or 11% increase over the prior year. The growth in equity was primarily a result of increased retained earnings. Additionally, there was an increase in share capital. Overall, our capital position remains strong. We continue to be well capitalized, and our liquidity and capital ratios are all above minimum regulatory requirements for individual regulated entities in all the territories in which we operate. In closing, I express my gratitude to our dedicated team for their resilience and commitment to achieving our strategic priorities. Thanks to our valued customers and shareholders, we're committed to delivering the highest quality service to our customers and generating strong returns for our shareholders. Thank you, and I'll now hand over to our CEO, Robert Almida.
There you go. Good day, everyone, and thank you for joining our Q3 investors briefing. Special thanks to Malcolm for guiding us through the report on our commendable performance this quarter, which demonstrates continuity and progress. Today, what we are witnessing is evidence that after a period of volatility, NCB Financial Group's performance has stabilized and is poised for steady growth. You heard this from our chairman earlier in his opening remarks. He mentioned 4 quarters, and I'm going to tell you it's been only 3 quarters since the significant changes took place. They took place 4 quarters ago, but this is really the 3rd quarter of performance upon which we're reporting. So it's been only 3 quarters since significant changes took place, and we are pleased with the extent of, as well as the speed at which we have moved past this turbulence. We believe this is a testament to the strength and the resilience of the group. Our objective is to grow core recurring earnings whilst reducing volatilities and one-off impacts through robust risk management practices. And our strategy is clear. First, leverage our unrivaled scale, assets of $2.3 trillion across over 20 countries in the region, and use this scale to provide our customers with unrivaled cost efficiency for their day-to-day financial needs, what the chairman referred to as commodity needs, the things that everyone needs day-to-day to conduct their financial affairs. And our goal is to be the unrivaled cost leader in that space by leveraging the scale and scope of the business. We do this, and as we spoke about it several quarters ago, with an unrelenting focus on efficiency, governance, and customer experience. Second, our strategy is to realize on the synergy potential of the region's leading banking and insurance groups. So to provide our customers with comprehensive and convenient financial solutions. Said a little bit more simply, a one-stop shop. And third, to create wealth for our clients, create wealth for the region by adding world-class financial advisory capabilities to this platform. As our chairman mentioned, this is where we differentiate ourselves. This is where the value add really comes, is by helping to create wealth. So the 2 sides of the equation are low-cost leader on day-to-day financial operations, the things that everybody needs every day to conduct their financial affairs, whether it be as an individual or a business. And second, to leverage the scale and the scope of the platform combined with our heritage to help clients and the region create wealth by adding world-class financial advisory capabilities on top of that scale platform. Malcolm has provided a comprehensive financial overview, so I'm not going to repeat that. What we've also seen is substantial growth in key portfolios and an expansion in our business at a reasonable pace. Our focus remains on being brilliant at the basics, enhancing customer experience, improving efficiency, and lowering our cost-to-income ratio. During the quarter, we also made progress on the capital allocation front. We executed the Clarion, which is in Bermuda, share sale agreement with completion pending regulatory approval. We also completed our APO, raising $2.5 billion. And the sale of our banking subsidiary in the Cayman Islands, which was previously announced, is progressing with a view to obtaining regulatory approval. All of these initiatives, combined with internal capital reallocation, will increase the resiliency and the efficiency of our sizable capital base. I'm pleased to announce that NCB Capital Markets Limited successfully brought the IPO of Omni Industries to market in Jamaica, the first listing on the junior market in 2024. Additionally, in Trinidad and Tobago, NCB Merchant Bank TT underwrote the IPO of Eric Solis Marketing Limited, a print solutions provider, reinforcing our commitment to supporting SMEs and driving market growth. NCB Capital Markets is committed to the revitalization of the capital markets in the region, which are so critical to funding the growth aspirations within the region. We may now turn to the most recent actions that would have demonstrated our significant strength and the humanity of NCB, as seen in the aftermath of Hurricane Beryl. Despite the challenges posed by Hurricane Beryl, our systems showcased tremendous reliability and uptime. NCB Jamaica maximized ABM availability, and our online platforms remained accessible. We were the first bank in Jamaica to resume branch operations post-hurricane, and Guardian swiftly processed claims in the affected countries to ensure business continuity for our clients. Our proactive preparation and resilience allowed us to withstand the storm with no shocks or business disruptions. Claims assessments are ongoing at Guardian. Our teams are to be lauded for resuming services whilst managing their own personal challenges. Their sense of urgency for resumption of normalcy supported restoration and response. In response to Hurricane Beryl, NCB Jamaica and the NCB Foundation launched the $150 million matching Building a Better Jamaica Fund to support the relief efforts in the most devastated areas, emphasizing our commitment to our customers and our communities. We're pleased to announce that through the support of donating fundraising and executing project management partners and individuals locally and internationally, we surpassed our target and are able, together with the generous donations from the individuals and organizations who participated, to provide over $300 million in relief and recovery support. I would like to recognize our donor fundraising partners who made it all possible. American Friends of Jamaica, Food for the Poor, Jamaica and Canada, Jamaica Social Stock Exchange, Bread's Treasure Beach Foundation, Global Empowerment Mission, My Co-Meditations, Mustard Seed Communities, and the Office of Disaster Preparedness and Emergency Management. And thank you to all of our corporate and individual donors of cash and in-kind donations. Looking ahead, we aim to further reduce our cost-to-income ratio and become a low-cost leader. We're focused and confident in executing our strategies with precision, adhering to our approach of it's 99% execution, 1% strategy. Said the other way, success is 1% strategy and 99% execution. Our dedication to wealth creation and extracting the synergies between our NCB and Guardian subsidiaries, between banking and insurance, remains steadfast. In summary, our commitment to operational excellence and strategic growth remains strong. We will continue to drive synergies, enhance customer experiences, and deliver value to our stakeholders. Thank you all for your continued support and your trust in NCB Financial Group. I look forward to your questions and a productive discussion. And with that, I'll turn it over to Dave.
Thank you, Rob. So we have a few questions here from really one of our shareholders, David Rose, and I will, as I go through, indicate who we're asking to answer each question. First up, we will start with a couple of questions for you, Rob. So David Rose has asked, how is NCB Financial Group's ongoing efforts to address its $36.84 billion debt maturity for the current financial year? How are those efforts going?
So they're ongoing. Just kind of a normal course of business for NCB and NCB Financial Group. Again, this is what we do for our clients as well as for ourselves. So they're going pretty well. We're in July, so the first half of the year's maturities were all addressed, and we're well underway with the bond offer that's in the market right now. That's looking pretty good. So overall, it continues to be, I'd say, business as usual on that front, David. So nothing in particular to add other than just business as usual.
Okay, thanks, Rob. And you just answered the second question, which was asking about the refinancing bond. A third question from David Rose for you is, would NCB Financial Group consider a new APO in 2025 if interest rates start to trend down and liquidity improves?
So David, capital is when we started off, we talked about capital efficiency, we talked about operational efficiency, and the scale of the group is such that we have to. So first of all, we have to be looking at capital efficiency. That means using the best forms of capital and making sure they are deployed in the right business units, and we don't have excess capital sitting where it's not earning great returns. And we make use of the most efficient sources of capital. Again, that is the core of what our business is about doing that, again, for our clients as well as for ourselves. So in answer to your question, if the markets we don't have any plans to do an APO right now, another follow-on APO right now. But if markets change and the equity capital markets were much more hospitable, and interest rates were a lot lower, so people were reallocating capital from debt to equity, we would take a look at that at that point and take a look at it in the context of what's best for shareholder value, what's best for our return on equity, our earnings per share, and we'd make the decision that way. So we wouldn't rule it out. So I guess my short answer is we definitely wouldn't rule out any follow-on APOs, but we don't have any plans right now. Market conditions change, we'll reevaluate.
All right. Thanks, Rob. Another question for you from David. So, and I guess this question comes in the context of your comments on the Clarion sale. And what he is asking is, would NCBFG still retain a significant board presence and account for Clarion as an associate after the sale has been completed?
Okay, thanks. So I'll start with the second half of that question. We don't anticipate Clarion being an associate after the sale. The first part is a little bit more gray, where we would anticipate continuing to potentially have board representation. So we're going to continue to have a minority interest. We look forward to support, to good things to come from that minority interest, and we're very committed to continuing to support Clarion as well as the prospective purchaser in the growth of that business. So we're very committed to supporting the business, to supporting the new controlling shareholder, similar to, quite frankly, similar to NCB Cayman. The difference being that we will actually maintain a minority stake in Clarion, but don't anticipate it to be an associate.
Okay. Thanks, Rob. Malcolm, a question for you. David Rose is asking also here, what are the capital adequacy ratios for NCB Capital Markets in Jamaica, National Commercial Bank Jamaica, as well as Guardian Life Limited? So not sure if you have all of those figures to hand. If you do, you could share them now.
Yes, thank you, Dave. Thank you as well, David, for raising the question. So, I mean, we're focused on ensuring that we maintain ratios that are adequate for operations. And as I indicated in previous investor briefings, these ratios are not static. So the most recent ratios, David, National Commercial Bank Jamaica Limited, 14.5%. NCB Capital Markets, 18.4%. And Guardian Life Limited, 259.4%. So that's the most recent capital ratios.
Okay. Thanks, Malcolm. Those are, when you say most recent, those are as at
June.
As at June 30?
June 30, 2024.
Right. Okay, great. Thank you very much. All right, let's take some questions now from other execs who we have online. So this first question is going to be for Ian Truron, since we were talking about Clarion earlier. And the question, Ian, is this. Could you give some contextual update on the financial performance of the business of Clarion at this time?
So I don't know if Ian's on.
I saw Ian earlier.
Oh, is
yes.
he? Okay.
Rob, yes, I was able to make it. Good morning,
Okay,
Dave.
great. Yeah.
And Mr. Rose, as always, thank you for your questions. I'm pleased to report that the financial performance of Clarion continues to do well. I always focus on a number of kind of key performance measures, and I'll start with stability first and foremost. From a capital perspective, Clarion continues to improve its capital ratio. On a year-on-year basis, it's improved by approximately 10%. We're capitalized at a ratio of greater than 27% right now. And so we are poised for growth, as well as providing a return of capital to our shareholders as it's appropriate to do so. From a liquidity perspective, we sit at a very high level of nearly 200% on a liquidity coverage ratio perspective, and again, are positioned to take advantage of some lending opportunities that are in front of us as we speak, as well as some investment opportunities for our balance sheet that continues to grow. On the health of the actual balance sheet, our NPL ratio has continued to improve. It has reduced by near 10% on a year-on-year basis. And so that number continues to come down. And again, we have line of sight to remediation on a substantial number of those on a going forward basis. On an earnings profile, we are relatively flat on a year-on-year basis with regards to net income. Revenues are effectively flat. Operational expenses have been maintained. We do continue to look at efficiency opportunities in front of us and expect those to continue to improve. And from a forecasted perspective, we are ahead of budget, and I expect to either be on budget or exceed budget for year end. So generally, positive news from a Clarion perspective. And again, thank you for your question.
Excellent. Thank you, Ian, for that very comprehensive response. All right, let's take a question now for Ian Chinapu. Sticking with the Ians. The general insurance segment was down year to date in operating profit. And he says he knows that Guardian is currently assessing the impact of Beryl. But what is your preliminary estimation of damage in the Caribbean? And presumably he wants to know in the context of what we are to expect in relation to the impact on Guardian's business.
Sure. Thank you. Good morning, all, and good morning to all the Davids on the line as well, and Daves. For us, let's start with the industry. The estimate from our main brokerage partners across the region is a gross potential loss of about US $500 million. Guardian is estimating for our book around US $48 million gross, which is before our reinsurance. Net of reinsurance, our potential maximum loss is, or expense is around US $10 million. So as you mentioned, this is preliminary. Claims are still being settled. We are working very hard to get the claims settled very quickly, given the impact on our customers and on the countries. So we are expecting that to be concluded within the months of August and September. But those are the numbers. Gross for Guardian, $48 million, and net after our reinsurance coverage would be maximum US $10 million.
All right, thank you, Ian. And then there's a very specific question here that unrelated that David has asked about the Cambridge development in New Kingston. And he's asking if you have this information about how many units of the Cambridge are left to be sold.
I would not come to this meeting without this information. It's always requested. David, we've sold another 7 units, but we're actually doing some upgrades now on paving and so on. So we're going to have another sales campaign later once that's complete, but we're down to 47 units outstanding. So we've sold some more units and we're doing some upgrades to the parking lot, etc. And then we'll do another campaign. So we do expect to have much more sold by the end of the year.
Okay. And how many units overall, Ian, are in the Cambridge?
Oh, that's a good question. You got me. I think it's.
Oh, I did get you. That wasn't David's question. That was mine.
Yeah, I think it's about 150 or so. So yeah.
Okay. Yeah. It really is very beautiful. It's very attractive when you drive by and well located. But anyway, that was a free ad for you from me. Let's move on to the next question. I'm gonna go to now Bruce Bowen, just checking that you are fully on and able to hear me. Bruce?
You're on mute, Bruce.
I am on.
Okay, fantastic. So the first question here that David has for you, and we're very grateful for these questions, David, because nobody else sent any. So, I would have nothing to do if you hadn't sent any questions. But so Bruce, this question here from David, has NCB done any additional layoffs in recent times, considering the reduction in business and higher rates?
A quick answer is no. There is, we're always looking at opportunities to optimize our operating model and from that perspective, gain efficiencies. But in terms of the volumes, there's been some reduction in loan volumes, particularly on the commercial side, a little bit on the retail side. But again, just with customer relationships, there's a lot, our customers require of us a whole lot more than just loans, and that if in a given period of time there aren't loan requests, there's still, the day-to-day requirements, there's investment needs that we need to be looking at. So from that perspective, no. In fact, we've been selectively adding resources to some of the high volume branches as we're trying to make sure that we're delivering as efficient a service as we can on the retail side in the branches. But short answer is no, there's not been layoffs due to volumes.
Okay, great. Thank you. Thank you, Bruce. I do have a few others here for you. So from David. So the next one here is that there was a mention of an increase in LPLs by 11% year over year. However, what is the past due loan situation looking like at NCBJ on a year over year basis?
Yeah, there isn't anything that I'm concerned with in the trending. There's been, if you look at our total non-performing loans as a percentage of the overall loan book, there's been a slight, basis points increase in that. I don't have the exact figures in front of me. You tend to get on a little bit of that when the loan growth in the loan book slows down. The loan loss provisions in the retail book are very reflective of the growth in that loan portfolio, which has been very focused on the consumer lending side as opposed to auto or mortgage lending in particular. There has been a specific transaction that has been in our loan that for several years now has been non-performing, and we've just in the process of wrapping up the disposal of the underlying asset there, and that is the most significant impact of him. That's the most significant transaction impacting that number. That isn't expected to recur. So looking forward, I do not have any concern that that number is going to be moving substantially higher. I think we've got the loan book under control.
Okay. David has also asked, what's the level of exposure in the parishes of St. Elizabeth and Manchester? And I suppose this comes in the context of Hurricane Beryl, and what has the potential forbearance been like, and the expected recovery in those parishes from NCBJ's perspective?
I don't have the specific exposure numbers, those, and I'm not sure whether we have our chief risk officer on the line that may have that. But overall, percentage-wise, the largest of our clients that are in the communities hardest hit did have insurance. Where we're seeing the biggest impact is more on the small micro customers, and many of them that are non-borrowing, but we've been looking at how we can support them through this. Some of those is where the relative impact is higher, but that is not a significant percentage of our portfolio. So as we're looking forward into the next few quarters, we don't believe that the impact of Hurricane Beryl is going to have an impact on our non-performing loans or our provisions.
Okay, thanks very much, Bruce. I will now turn to a question for Daniel Cameron. A couple of questions for Daniel Cameron Duncan, Head of Payment Services. So Daniel, this is also from David. We do have a few other questions that have come in from at least one other person, but I'll just finish this question from David first and then move on. What is the reason for the jump in credit impairment losses for the payment services segment?
Thanks for that question, Dave and David. Appreciate that. So I don't have the exact increase in the credit impairment losses. What I can say is that whereas we've been seeing an increase in the dollar value of the losses, when you look at the receivable portfolio increases over time as a percent of the receivables, that has really remained quite steady. That said, there has been some inflation in the environment generally. And so what we've been doing is really working closely with our customers to see how we can sort of manage the implications of those changes and the impact that's having on them. And working down, to get to sort of regularizing the payments. But like I said, as a percentage basis, NPL has not increased significantly year over year.
All right, thanks, Daniel. And another question here for you. Well, there was a question about the drop in total expenses, but I think Malcolm commented on that earlier. And then the last question is, what's the status on the virtual card to be launched by Link, and how is the new GK Western Union partnership going?
Okay, thanks again, David. Really appreciate the opportunity to talk about Remittance and Link, as always. So the remittance business and the remittance transactions in Link has grown significantly year over year. We're really excited about that, 3 times the amount. So as you know, we have a partnership with MoneyGram, and then most recently in this quarter, we would have launched our partnership with GK Western Union. So we've been seeing transactions, and I mean, we don't just stand that that partnership started in May. Every month thereafter, we've been seeing essentially a doubling of the transactions within the Link platform, month after month in the GK transaction. So far it's going very well. We still have a lot of work to do, but very excited about the opportunity in terms of the, penetrating the market within remittance and the customer experience that Link has created in getting direct remittances 24/7 digitally to the Link wallet. So that has been going well. We are working to deliver the virtual card in short order. We're expecting to finish the development work in virtual card by the end of this quarter. One of the things that comes with that as well, which is why we would have delayed the initial release of the virtual card, is also going to be the fact that it will be NFC capable. So you will be able to use the Link wallet and tap at a point of sale machine for all of your transactions. So that's a big addition to the Link wallet, which we're going to be releasing soon. So we just need to get through the regulatory approval processes and complete our development work, but we are expecting next quarter to see the release of that capability in Link as well.
Danielle, if I can ask you just to use the opportunity, maybe you want to talk a little bit about EPOS as well.
Yes, definitely. So Rob, thank you for that. So last quarter, we would have launched our point of sale, our EPOS, electronic point of sale solution in the acquiring business. So what that is you're using your mobile phone or any mobile device. A merchant is able to accept transactions by simply tapping the card or tapping a wallet to the mobile phone. It's a great solution. No incurred costs in terms of the ownership of a physical point of sale machine. It's easy to download the solution onto the app, so you can very quickly start to accept transactions via your phone. Obviously, it's mobile, and so it goes where you go and allows for continued transactions on a 24/7 basis. So we launched that right before Beryl. We now have over, I think, 300 or more merchants that have already signed up just in this kind of last couple of weeks of not a lot of promotion, which is great. But very exciting product for our merchants, especially our SMEs, which would have come out, and we expect to see significant growth in that product.
Thanks, Danielle.
Okay, thanks, Daniel. There's another question here that I'm going to just move to, since we have you on the floor, Daniel. It's from Javon Keys. He said it's for Bruce, but I think you can take it. What's the status of our ABM network performance year to date?
Sure. So ABMs have been performing reasonably well, very well, and we've seen a significant improvement over the course of the last several months. The year-to-date availability for us is 97%. That's looking at it from a peak hour perspective from 6 a.m. to 10 p.m., which is when almost all of the transactions, 97% of the transactions actually take place on the platform. With Beryl, we did have, almost 68 machines that, I just wanted to talk about this, but 68 machines that would have gone down as a result of the flow, JPS, pretty much lighting and connectivity issues. We have been able to restore 80% of those or more of the ABMs to date. We only have about 15 that remain that don't have connectivity to them yet, but we continue to work with our providers to bring those up. So overall, when I look at the June numbers, we are at 98% availability within the peak period. So we've really been seeing a significant improvement in the fleet. We have 304 machines across the island, almost 60% of which are really in the rural areas. And we're really focusing on ensuring that we have that availability island-wide to meet our customer needs. So we're going to come back on the last 15 that we have remaining. We're really working with our partners to get those back up and running. But the other machines, we've been, the availability on those have been steady, like I said, at about 98% in the last month.
Great. Thanks, Danielle. Rob, I have a couple of questions for you from Al Edwards. So the first one, I'd have to take this one because it starts with a comment which says, good performance. He then says, I note you are making an impact with SMEs. How do you intend to further build that arm?
So first of all, thanks for the comment, Al. And in terms of the question, so Ian and Bruce can probably jump in here a bit more, even Danielle. But I'd say if I put this into context a bit like this, what you'll see in what everyone's talked about is a strong focus on utility. What I mean by utility is started off with Chairman's comments on, he referred to banking and insurance as commodities. I translated that into saying it's day-to-day financial needs. The needs, and then if you listen to Ian's comments in response to Hurricane Beryl, like those are big numbers, right? Like $500 million of gross losses across the region, or gross costs across the region. But it speaks to a need. It speaks to a need to recover from that kind of a hit. And you hear in there that says, here's what Guardian's role is, and here's our access to reinsurance. So one of the biggest things that Guardian brings is it's able to provide insurance to the market, bring insurance solutions to the market, which are really important to be able to recover, and make them affordable, make them available. And at the same time, that's only possible if we can maintain access to global reinsurance. And so what Guardian does through its scale is it maintains that access to global reinsurance, which enables the provision of day-to-day insurance. I say that only because when we went out to St. Elizabeth and you go out to, you visit the SMEs that are there, you really see the importance of, hey, the point of sale risk still works. You really see the importance of, I was still able to conduct my day-to-day business as a consumer. I was able to buy stuff. I was able to avail myself of money to handle my day-to-day life. As a business, I was able to conduct commerce that people actually needed food. And if you weren't able to take the exchange of payment, well, then merchants weren't going to give away the food for free. And so you got to see firsthand, or we got to see firsthand, how that was happening, while at the same time, the philanthropic arm was providing support for those who are not insured and need more support. So you're hearing on the SMEs in EPOS, e-point of sale, that is a real enabler for SMEs. Virtual cards help SMEs. The IPO of Eric Solis in Trinidad, again, it's an opportunity to help SMEs access the capital markets. So there is I don't want to just focus on SMEs, so I started off with a much more broader answer. That what you're hearing is a very strong focus on utility value that says we're meeting real needs. And from a selfish internal perspective, Danielle hit it and says, hey, without a lot of promotion, 300 merchants signed up. And if you've got something that really serves customer needs, you don't need to do a lot of promotion. And so that enables our business to be more efficient because our cost of customer acquisition goes down. So maybe not directly answering your question, Al, but it's everything we're doing is focused on serving needs of every segment of the market and trying to really understand what are their needs, what would be impactful, and make sure we can deliver that efficiently, cost effectively, make it available. All of that is just the platform then that, as Chairman points out, hey, where's the real value add? The real value add is then saying, take advantage of all of those relationships, layer on top of all of that scale financial advisory capabilities that enable us to help businesses and customers create wealth, whether they be SMEs, large corporates, consumers, individuals, families, government institutions, whatever the segment is, but add that wealth creation part on top of it. But it all starts with being able to serve daily needs very efficiently, very cost effectively, very reliably. And if we do that, and that is what our focus is on, we're seeing the impact it has on the SME segment in the markets.
Okay. Thanks, Rob. I do have one more that I'll take from Al for you, and then we'll take some questions that we've got on social media. Before we close out, because while there are some additional media questions, we do provide additional opportunities to have a conversation with our media, and I'm really enthusiastic about getting some social media questions in as well. So this is the last one that we'll take from the media persons during the investor briefing. Al has asked, given recent performances, will NCB be looking to increase its dividend payout anytime soon?
I think that'll be dependent, Al. I couldn't say that there's any plans to increase it right now. I think if you take a look at our performance, and I started off my comments by speaking about stabilization. So everything we've been doing is being about stabilizing operational performance. So reduce the number of customer complaints, stabilize ABMs, availability, focus on core recurring earnings, not just one-offs and one-offs in either direction. We still have both, one-offs in both directions. We get some negative hits. So Bruce alluded to it in a particular loan loss, and so we're trying to reduce down the amount of volatility that exists in the business, grow the amount of core recurring earnings. You're seeing that in the quarter-over-quarter performance, which hopefully you're seeing is getting more stable. And out of that, and that includes stability of dividend payments. From that base, we'll take a look at our overall capital allocation opportunities. What are the needs to meet? We want to make sure, again, it's not just about maintaining resilience. We're trying to increase resilience at the same time that we are trying to serve our meet our stakeholder needs and our shareholder needs. While and I think David Rose has said it earlier, which was if the liquidity in the markets could change and capital markets change, we'll get access to more pools of capital, both locally and internationally. So all of that will go into our reassessment short answer, no particular plans right now to change dividends one way or the other.
Okay, thanks, Rob. All right, so here we have a question from social media. Omar Hibbert is asking, what has the, I'm sorry, I should say, I'm going to direct this one to Bruce Bowen. What has the bank been doing to help protect customers, especially business customers, from fraud? And there are actually a couple of questions about customers seeking to be able to secure the right protection from fraud for them. So if you can just generally speak to that theme as well, Bruce, about protection from fraud.
Sure, absolutely. And thanks for the question, Omar. If we look at the overall instances of fraud that get raised with us, commercial fraud to our commercial customers is by far the smallest segment. The majority of the cases that are raised with us are coming from the consumer segment. The biggest instances by far of fraud occur when there is someone's received a link by email or by text, or if someone through some other means is trying to get access to a person's password so that they then can fraudulently access the account and send money out. That is by far the biggest single source of fraud. The online platform for business customers is built with a lot more security, tokenization or token requirements, RSA requirements. And for that reason, the instances we have of business customers raising that they've been defrauded is very low. Our real focus has been on the consumer side. And as I indicated, the single biggest thing that customers can do to protect themselves is not to click on links that are coming to them from any method. We have been publicly out reminding people not to do that. We one of the lead sponsors for Olympics, and I know a significant percentage of our TV Olympic ads are focused on that exact issue. We are seeing a general reduction in the number of fraud instances. Certainly fraud losses have reduced very significantly. I think they're down about 70% last I looked from about 9 months ago. Some of that is by us increasing the requirements where people need to put a token in, what was called dual factor authentication, reducing limits of amount people can transfer. So all of these things, the safer we make things will often mean it takes a couple more steps for customers to do things. So it is a trade-off, but we are seeing that reduction coming down. We are going to be rolling out some enhanced features that when there are online just Visa or debit or credit transactions that are going online, that it will require a one-time passcode in order to go through, because the second most prominent form of fraud we're seeing today is where a customer will allow someone, we see it often in parents and grandparents giving children access to details so they can one time make a payment online, say in a gaming site or that, and then it keeps recurring back. And then the fraud claim comes to us and we investigate and we're able to relate it right back to that same instance. And 9 times out of 10, someone acknowledges connected to the person that they've been using the card. So we're going to be putting in over the next few quarters a requirement that when those online payments are made, that it requires a one-time password being put in, so that then the card holder the information, so that someone can use the card once, that they can they'll still have to authorize every time it's used. So those are the big things we're doing. As I said, the good news is that the instances and the dollar lost have reduced significantly over the peak about 9 months ago. But we continue to look at best practices globally of what we can be doing to continue to stay one step ahead of the fraudsters that are constantly looking for new ways to attack our customers, our good customers.
Yeah. Okay. Thanks, Bruce. And I think your answer underscores that while we try to stay ahead as an organization, it's also important that our customers try to stay ahead of the activities of fraudsters as well. That awareness is really important. So I did promise. I think it's we're at our last question, which is going to be for Ian Chinapu. And I know, Ian, you had a clarification or correction to something you had said earlier. But just before I kick to you, one quick clarification on Bruce's answer. In the course of Bruce's answer earlier, we NCB, we're proud to sponsor. It's the NCB's. Sorry, we are proud to sponsor TVJ's coverage of the Olympics, and we're also bronze sponsors for Nationwide's coverage too. So Ian, you can give your clarification in respect of that data regarding the Cambridge, and then you can also answer a question that we got on social media about whether any group insurance is available for home owners. Sounds like an interesting question.
Oh, no problem. Yes, thank you, Dave. It's 176 units at Cambridge, not 150. So I got that clarified. Thank you. Yes, of course. I mean, in group insurance for homeowners, normally when it comes to a group of people or employees of a company, we would do group health, group life, we'd offer pension services. Homeowner insurance tends to be per, for each person, because, of course, each person or family would own their homes directly. And we do offer that from the Guardian Group Insurance Jamaica Limited, and of course, across the region, Guardian Group Insurance Limited and Dutch Caribbean Fatum. So, but group insurance for homeowners, it will be individual. It will be by the homeowner. It wouldn't be the way we would do group health or group life, which is, for a group of employees for different companies, etc. I hope that clarifies.
Thank you very much, Ian. And that brings us to the end.
Dave, but in the spirit of listening, we will take that under advisement.
Yes, indeed. Thanks, Rob. So, Chairman, that I think takes us to the end of the Q&A segment. So hand back over to you to wrap up.
Thank you very much, ladies and gentlemen. This has been certainly an energizing meeting, listening to it, given where we're coming from. And I just would like to reiterate the salient points. We spent the last 3 quarters, thanks to the correction, CEO Almida, stabilizing the business. Now we're in growth mode. Growth is going to come from unleashing the full potential of the scale that we have, the full potential of the fact that under one roof, we have a major insurance company and a major banking institution. That's unique in the world. We are on our way to become the lowest cost producer, and wealth management will be the huge value add, as Mr. Almida said, to individual customers, corporate customers, and the region. Our progressive improvements over the last 3 quarters would be tangible evidence that the retooling efforts that we have embarked on is taking root. And we continue to make sure that we get our cost to income ratio down. It's currently, I think the last quarter was 66.8%, on our way to the mid-50s. We are resolute, mid-50s to low 50s. So I thank you very much for your continued support, and we look forward to seeing you on the next quarterly analyst investor call. Thank you.
When you need it most with Guardian Link. From investments to critical illness and retirement, you can go from one click to totally covered. Application is easier, approval time is quicker, and with 24/7 online access, you can pay on the go. So get connected with Guardian Link today. Visit guardianlink.myguardiangroup.com and live secure, live easy.
Opening an investment account is easier with Go IPO. Crush the paperwork and get online with NCB Capital Markets' fully digital investment account opening platform. No need to visit an NCB Capital Markets location. You can upload any required documents like your ID, proof of address, and TRN from the comfort of your home. Plus, you can open the account with joint account holders. Be ready for the next IPO. Visit goipo.jncb.com to open your investment account today. Conditions apply.
In 2019, we gave you Go IPO, the region's first digital IPO application platform, revolutionizing the local equities market. With over $7 billion in capital raised via this platform, the innovation continues. Now we introduce the Go IPO Bond Portal, giving you a fully digital bond offer experience from application to confirmation. So there is no need to go in branch and no extra fees, because seamless access to wealth starts with the NCB Capital Markets Limited. Visit goipo.jncb.com. Click offers, then bonds.
Today's woman is not just an entrepreneur.